Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Tuesday, October 21st. Let's start with the Nasdaq market. We were looking for follow through to the upside. That is what we have here. That's a step in the right direction. It is troublesome though in the sense of the amount of enthusiasm that we have here. I would like to see that a little bit stronger for Monday's action. The next 3 days we want follow through to the upside to give us consistent a rhythm or behavior. So it'll be interesting to see how this comes together. A little bit of selling right now in Asia, but my bias is still for a move to the upside. In the euro, I'm also looking for a market to move to the upside. It's going to be very interesting to see if these buyers, which could be significant, can give us that kind of follow through. Right kind of setup. I'm not sure really the papers that are to support it though. So a little cautious here. My bias is for a move to the upside. In the notes, I feel the same way. This is a market setting up like it wants to go higher. The break that we have here, the loss of momentum that we see here, implies higher prices. That doesn't fit in with what I'm looking for the stock market. I'm actually looking for weaker prices in that market. Structurally, that's not what it's showing us. Here in the this marketplace, it did trade below this bearish level as we talked about before, and the difference between the bullish and bearish level. I'm going over this again because I've had a number of emails asking about how the magnitude of change actually works, where it comes from. It's 68 ticks. Each full tick in this market's $31.25. So that's $2,125 per contract. Over here in the bonds, again, it's $31.25 for a full tick. And in this market, it's 109 ticks. So that would be $3,406.25. In the gold market, so that's where it came from. In the gold market here, we can see that buyers did pop back in. We're still finding sellers on the highs. I'm not looking for a dramatic follow through in this market. An unchanged type day, and I feel the same way about the silver market. Oh yeah, and copper, when it traded above this bullish level, the difference between the bearish and bullish level in that market is, here's a way to think about it. In the copper market, one full penny is $250, and this market moved little over 3 cents. So the value of it is $875. That's the magnitude of change in that particular contract. All right, now crude oil. Crude oil, when it traded above the bullish level, the difference between the bearish and the bullish level in that market in crude oil, it's $10 per penny. And the total magnitude of change here in this particular market was $8.85. So that would be $8,250 was the magnitude of change per contract for that particular market. I'm looking for a sideways move here in crude oil. I am not bullish on that market. Soybeans, when it traded above again, if you look at the difference here between the bearish and bullish level here, that difference, that magnitude of change is 3 cents. Each full penny is $50, so that would be $150. It trades in 1/4 cent increments, which are $12.50 each 1/4 cent. All right, and here I'm looking for a sideways move. I don't see a lot of paper behind that also. And that concludes today's market studies. Thank you for being with me. Look forward to being with you again. And as always, take care.